Torsten, what happens to spreads? Because high yield spreads started to blow out a little bit on Friday. Investment grade spreads are still super tight. When does the 3% handle on 30 years start to trickle down?
Well, the real issue here is normally when we have a correction in equities, rates start to go down. But that's not what we're seeing, because the source of the correction is that rates are remaining fairly elevated because of inflation. So to your question about when will this spread to other asset classes, well, really at the moment the whole problem is that it's really core rates, meaning treasury rates, that are moving higher. And that hasn't really spilled over that much yet to equities and to credit. But if the answer from the market here is that the level of rates has to go up, either because the Fed is behind or we're having some inflation risk that people are worrying about in average hourly earnings and elsewhere, and the employment cost index, well, then the risk is that over time that could start to percolate to other asset classes. I agree with Gina, it is a little bit early, but at the end of the day, the question really here is that what domino brick is it that's toppling? If this is the domino brick that the Fed is behind the curve, then it could have certainly more serious implications.